Now, if I did hear that correctly, what does a credit score having to do with me being a good phys ed teacher or a waiter or a pharmacist? Why, what's going on?
You want me to make sense of this system?
Well, to try a little bit.
Other than it's all about money, because there is no correlation to someone having a 600 FICO score and being a bad employee. There just isn't, especially when 35% of Americans have collections on their credit reports, usually medically related, and it has nothing to do with their insurance that they have through their employers. It's just a flaw in the system. I mean, that's a whole other can of worms on how to deal with collections. Everyone deals with collections the wrong way.
Now, in your book, I think it was on page 9, you give the top 7 things that cause the most damage to a credit rating. Could you go through a few of those with us? Because I'm sure most of us either have misconceptions or no idea what's affecting this mysterious rating.
Yeah, so number 1 is going to be missing a mortgage payment. That is number 1 with a bullet. If you miss a payment on your home, which is, the roof over your head, lenders are going to look at that as a sign of extreme distress. The next is going to be going delinquent on a student loan. And part of the reason for that is because student loans are backed by the federal government. Uncle Sam doesn't like to, miss out on getting paid. But the majority of those student loans are going to be backed by the federal government. And so if you go delinquent on those, it causes a whole host of other issues. And then beyond that, it starts to stretch down into like getting tax liens and tax debt, because again, the government has the ability to say, if you owe us money and you haven't paid us, they will now shut off every other aspect or every other avenue of you getting another line of credit until you've paid them. They have that unique and rare ability that no other creditor really can do. And then after that, it gets into like collections. Collections will impact your FICO score by, on average, 50 to 70 points. And and here's the other wacky part. If you were the type of person that never gets a late payment, and then all of a sudden you get a late payment, it's going to severely impact your score more than someone who has late payments all the time.
I'm sure you know what you're talking about, but I'm going to say, I guess you just can't make this stuff up. This sounds so crazy, but it works for the system because we're all paying exorbitant rates when we really think of it. For a $20 pair of socks or a necktie or a shirt, we may be paying that debt off at 24% for years. So I guess it's good for the department stores and not good for us. Anthony, hearing all this now, let me ask you, where would we get at least the best we can do under the circumstances and something to kind of alert us? Where would we get a credit report that, A, we could trust the score and see if it's accurate? Many of us, of course, have the same name or a similar name to someone else, and maybe the person putting it in the computer just didn't care. So where would we get the right information that we could check up on this?
That's a great question, and we cover that in the chapter in the book on, called Gaming the System. But essentially, one of the tactics that you can use is to find a real estate agent. Every one of us knows a real estate agent. They're everywhere. Real estate agents refer business to the banks. The bankers that work there want to keep them happy. So therefore, if they're called up and they're asked to run a credit report and give the customer a copy of it, they will if that real estate agent's asking. The reason why you have to do it in that, kind of trickery sort of way is because the banks prohibit their employees from giving out credit reports to the consumers, because then, of course, the game. And if you doubt me on this, try it. Call up Bank of America and say, hey, you guys have my credit. I want to run it. I want to see a copy of it. And they're like, oh, we can't do that. It's just the way they're built.
So one way would be to go through a broker. Let's say someone is timid, though, and they just say, no, I'm just not that aggressive. I don't mind if I have to pay for it or something. What would be the next solution you'd tell somebody that they could either do from their bedroom on a computer this evening or tomorrow or whenever?
They should find a local banker that they know, someone that will pull the report for them as a favor. It's a bit harder to do than, finding a real estate agent, because they'll do the work for you. But if you know someone at like a community bank, sometimes they'll cut you a break and they'll run it for you and they'll hand it to you or they'll fax it to you or something like that. But almost every one of those banks are also supposed to not give you a copy of the credit report. It's not an easy thing to do. On my website, under regalcredit.com, we list a couple resources too on how to get an accurate credit report. Under the credit report section, where we'll say this is how to get a mortgage credit report. This is how to get a credit report if you're going to rent an apartment, because they look at a different report. There's a few different ways to do it there.
I remember years ago hearing something like, was it freecreditreport.com or something that you could get one a year?
Commercials.
No, this was one, though, I thought was legit, but maybe not.
Annual credit report.
Annualcreditreport.com. Is that a something we could try or should try, or is it even in existence?
You can definitely try it, but it's not going to be the same one the banks use.
Okay.
It has a limited 2-year history where the banks look at 7 years. It doesn't have any scores whatsoever.
So make friends with the banker.
But I'd say it's better than nothing. It's better than nothing. It's better than nothing to get it and check it out and make sure that all the information's accurate on there. You can stagger them so that you get one free per year per bureau. So you could do one month, another one a few months later, and then the other one a few months later than that. So that's a way to stagger them and try to not let anything slip through the cracks.
Anthony, once again, I want our audience to know, and if someone's out there teaching finances or a financial course, this is a great book, Your Score, by our guest Anthony Davenport, spelled Davenport. Anthony, can you give us the information, the website, and where we can find this book?
Yes. Website with resources relating to the book is AnthonyMDavenport.com. M is in Michael. That's where I'll have some of the tips and things that I mentioned in the book, and also have links to purchase the book. My company website is regalcredit.com, and our Twitter handle is regalcreditmgmt.
And we'll ask you that one more time before the end of the show. So if our audience, if someone didn't get it down, but the most important thing to get started, get the book, Your Score, by our guest Anthony Davenport. Really, if you don't save money with this book, you're kind of hopeless, because Anthony really lays it out for you. He tells you that, and even if you only take 5 or 10% of the information given, you're definitely going to save and at least show those bankers and the people. I once had a friend win for a car loan. They were charging him a very high rate, but he knew the game. And when he said, no, that's not right, they came back, well, we'll do you a favor. We like you. You're a really nice guy. And when they gave him the honest rate, he walked out. He said, if I can't trust you from the beginning, I'm not going to trust you now. And I'm guessing from what you say, this is more the norm than the exception.
100%. 100%. People don't understand the rules of this game, and it hurts them, and they use that against you.
Now, what about late payments? Is that the worst thing? Is it good to spread out our cards? Should we pay one? Not that we should, but if we have to, is it better to start cleaning up one and pay the others a little late, or what would be a strategy?
I'll tell you the best thing you can do to improve your credit score rapidly. So now, with your credit card balances, they impact 30% of your FICO score, which is almost as much as whether you pay your bills on time. Crazy, but it's true. And it's per credit card. So if you have a small limit credit card, like $500 limit on a Macy's card, and you put a couple $100 balance on there, it could severely impact your FICO score, almost as if you missed a payment somewhere else. Now, this is true even if you're paying off the balance in full each month. The reason why is because they're not reporting the balance to the credit bureaus every day. They're doing it typically every 30 to 45 days. So the best strategy is, if you're going to use your credit, 60 days in advance, zero out your credit card balances, refrain from using them until after you get the loan, with the one exception of a charge card like an Amex, where you have to pay off the balance in full each month. That's the one exception where you can go ahead and use those.
Now, Anthony, what about, we get all these deals. You walk in a store and it says, if you sign up for a new Visa card or something, you get a free newspaper for a month, or Red Sox tickets or something. There's always a promotion going on. Is there a ground rule? Do we need really today more than 2 or 3 credit cards, or do we even need that many? Or is it better to have 10 and maybe have $200 or $300 on each?
That's a great question. The average American has 11 credit cards, which is too many. The perfect credit profile, which we dedicate an entire chapter to laying out, shows that ideally you should have no more than 5 to 7 trade lines, which include like a mortgage or an auto loan or a car loan. So you don't want to get too many. Don't open up that store credit card because they're offering you 10% off those chinos, and you just really want to have them. It's not worth it because they'll make mistakes on those. Opening up those cards often, you won't get the bill in the mail. You'll forget you charged it. The interest rates are super high, and it could be dinging your credit by having too many open lines of credit.
And also, we also hear about to cancel or not. If we have, and if someone's saying this, okay, I have 15 cards or something, and I really don't use these other 4, should we cancel, or is that a bad thing?
It depends on your profile, meaning if you have accounts that have been open a long time and you've been paying them on time, think of those as like friendships that can vouch for you and say, Bill's a good guy. I've known Bill for 15 years, and he does what he says he's going to do. If you've had an account that's only open a year, it doesn't count as much. Go ahead and close that account if you have too many lines of credit open, but keep open the ones that you've had open a very long time, no matter what kind of interest they want to charge you, no matter what their annual fee is, because those ones carry the most weight on your credit report.
Anthony, we really want to thank you. This has been a most interesting show. And one more time, I want to tell our audience, the book is Your Score. It's by our guest, Anthony Davenport, Davenport. If you don't do yourself a favor and get hold of one of these books or a copy of it or share it with a friend or neighbor, you're paying way too much than you should be paying. Can you give us that website real quick again, Anthony?
Yep, AnthonyMDavenport.com. And if you Google my name, Anthony Davenport, and Oprah, you'll see that she included an excerpt from this.
Oh, I would think you should be on there.
Oprah touch.
There you go. Perfect. Thank you so much. You've really helped a lot of us get off that skid we're on, and hopefully we'll get going on it tomorrow and get our life in order. We'd like to remind our audience that you've been listening to The Secrets of Success on WHPC, the voice of Nassau Community College, 90.3 WHPC. I'm your host, Bill Horan, asking you to please join us again next week at the same time when we will continue our journey to success.